Welcome back to The Explainer. If you've been watching the charts this week, you know the energy out there right now is just intense. Today, July 12th, 2026, we are diving into an absolute epic battle currently ripping through the crypto markets. We're talking a massive convergence here, institutional adoption hitting head-on against a flood of token unlocks and mounting macro pressures. To really capture this clash of titans, we've styled today's visuals with some vibrant comic book-inspired vector graphics. It's like a dynamic anime showdown out there. All right, let's jump straight in. So why is a market with literal billions of dollars in motion completely stalled out at a perfectly neutral 54 on the Fear and Greed Index? Honestly, it's a fascinating paradox. We've got this high-stakes environment with massive capital flying around, yet the overall market sentiment, frozen, dead in the middle. It essentially tells us that for every aggressive buyer stepping up to the plate, there is an equally aggressive force pushing the market right back down.
Section 1. The market battleground today.
Look, on the surface, these numbers look incredibly boring, right? Bitcoin is hovering near $63,850 with a barely noticeable drop. Ethereum is sitting just above $1,800, technically outperforming Bitcoin a bit today, and XRP just stuck in the mud right below $1.10. But do not let this sideways price action fool you. Underneath these static numbers, a massive clash is brewing. These flat prices are actually the result of equal explosive pressures hitting the market at the exact same time.
Section 2. Institutional titans enter. We can visually pit these forces against each other. Picture this as an epic anime-style showdown. On the left side, we have the bulls, armed to the teeth with massive ETF inflows and historic mainstream sponsorships. And on the right, clashing right against them, we've got the macro bears, wielding a tidal wave of token unlocks and a highly hawkish Federal Reserve. Let's break down the bulls' offensive first, shall we? The bulls landed a massive combo strike just a couple of days ago on July 10th. For 2 entire months, we watched capital just bleeding out of these funds. But suddenly, bam! U.S. spot ETFs reversed a brutal 8-week outflow streak to rake in major capital. We're talking Bitcoin ETFs pulling in over $90.4 million in net inflows, while Ethereum funds secured over $84.42 million. Guys, this is actual institutional cash taking coins off the market, creating a very serious foundation. And the bulls are also leaning heavily into cryptic speculation to build that momentum. Michael Saylor just sparked rumors of a brand new MicroStrategy Bitcoin acquisition. He posted tracker data on X with this very deliberate kind of mysterious caption. Orange dots tell only part of the story. You know how this goes. This kind of strategic signaling from massive market players injects Mulger's speculative energy straight into the bullish camp. But this institutional return isn't just some daily blip. It is providing a totally vital structural floor. These returning ETF buyers are stepping in as a foundational safety net. They're essentially anchoring both Bitcoin and Ethereum against the massive incoming sell pressure that we are just about to discuss. Meanwhile, Coinbase and BitKit are practically walking right through the front door of mainstream culture. The Esports World Cup 2026 just wrapped up in Paris today, making history with these 2 platforms as the first ever crypto sponsors for the event. And look, they aren't pushing specific tokens here. This is a pure, high-visibility branding play, tapping straight into a massive digitally native demographic. The institutional foundation is expanding in literally every direction. However, all this bullish momentum points toward a period of distinct consolidation and localized volatility. The market is gearing up for a major test of endurance right now. These institutional bids are about to run headfirst into immense supply pressure, which is pulling us right back down into that neutral territory we saw earlier. Section 3. Macro clouds and token unlocks. Here's the biggest threat today, an overwhelming supply drop of 237 million unlocked tokens hitting the market. Pump Fund alone is unleashing a colossal $125.9 million injection of tokens today. That is nearly 9% of its total supply, which is huge. Add to that Aptos unlocking another $6.78 million. Listen, when this much new supply floods the order books, it requires an immense amount of buying pressure just to keep prices completely flat. And compounding this massive sell pressure are dense macroeconomic clouds, keeping risk appetite tightly in check. The bears have a very clear narrative here. We've got ongoing concerns about inflation persistence, keeping traders completely on edge, paired with a hawkish Federal Reserve that is actively suppressing risk-taking. Traditional investors are just playing it safe, remaining highly cautious until clearer economic direction arrives later this week. And man, the DeFi sector just took a critical hit. Hedera's largest lending protocol, Bonzo, suffered an Oracle manipulation exploit, resulting in a $9.05 million loss on July 11th. This single event collapsed the protocol's total value locked by a staggering 77%. While this is localized to the Hedera ecosystem, it acts as a stark reminder of those ongoing Oracle risks. It keeps traders incredibly cautious and definitely sparks fears of increased scrutiny on lending protocols across alternative Layer 1 chains. Section 4. Ripple's Regulatory Waiting Game. This dynamic is so fascinating. Over on the retail side, activity on the XRP ledger has completely frozen. Like, we just hit its second lowest daily activity level of the entire year. Retail is essentially sidelined. But simultaneously, the whales, we're talking wallets holding between 10 million and 100 million XRP, are quietly and consistently loading up their bags. The smart money is clearly using this flat price action to accumulate in anticipation of what comes next.
Section 5. The Catalyst Timeline.
So what are those whales waiting for? Well, this timeline builds incredible anticipation. It's kind of like a series of upcoming boss battles. First, on July 14th, we get the U.S. CPI report to measure inflation. The very next day, Federal Reserve Chair Kevin Warsh testifies, which will heavily signal the Fed's next move. And then on July 17th, the massive one for XRP, a U.S. congressional hearing on the Clarity Act. This hearing could definitively classify XRP's regulatory status once and for all.
Section 6. Holding the support lines. Okay, so the crucial takeaway here is this. The market's next major direction relies entirely on these technical support levels. Preserving that $62,000 floor is absolutely critical for Bitcoin's recovery momentum. If it fails to hold that, it could signal a rapid return to bearish pressure. Conversely, Ethereum holding strong above its $1,800 pivot suggests a potential shift towards a sustained bullish trend, assuming that this new ETF demand persists.
Which brings us to the ultimate question as we wrap up this explainer. As we watch these explosive forces collide this week, ask yourself, which titan will emerge victorious in this ultimate market tug-of-war? Will the returning institutional ETF demand in these structural floors shatter the macro clouds? Or will the overwhelming token flood and a hawkish Fed just totally drown our technical support lines? Keep a close eye on those mid-July catalyst dates, guys. Thanks for joining me on the explainer today. And stay focused out there.